Through the pain, the blood, the sweat, the tears, this might be one of the best situations Bitcoin has found itself in, frankly, in well over a year. And we're going to be breaking down why that is after, honestly, such a horrific day. This dump literally accounted for $19 billion in liquidations in one day. To put that in perspective, the COVID crash was 1.2, the FTX crash was 1.6. This is many times larger than both of those events put together. And ladies and gents, I've been doing this for over 8 years. I have a lot to say about this because we've seen stuff like this happening before, and we've got some pretty good reason to believe that things could be going parabolic soon. However, before we get into this video, as usual, I do have to preface this by saying that a lot of this content is going to offend people and upset people. Don't really know why. I think they're just overly sensitive in the crypto market. If that's you, you might not like this channel, you might want to exit now, but if you appreciate truth bombs, then right here, we're getting into it, because the thing is, ladies and gents, this was such a magnificently large event, absolutely terrible destruction caused, but Bitcoin only managed to drop from its all-time high down by 11% down to its current price, and that really tells us a lot. Now, what I've gone ahead and done on this chart is I've gone ahead and put down all of the instances in recent history that we've seen a pretty large liquidation hunt, essentially. This is exactly what we got this time, and we know why we got one of these events. It was because of Trump's tariff news. Now, Trump obviously put this news out at the end of the Friday trading session because he wanted the weekend to give the market a little bit of time to kind of recoil from that news, digest it, absorb it, and then come back with a more level head on Monday. Great strategy. We've seen it done before, and it does work well. Now, here's the thing. Given that this did come as a result of Trump's tariffs, really what we know about this is that the market was over-leveraged at the top. This has actually been one of the recurring problems of this entire bull cycle for those of you that have been paying attention to the data, which is that a lot of the time when the price gets super, super high, just everyone's going max long 100x, 50x, 20x, whatever it may be. And, you know, whether or not you think it's a good thing is besides the point. It has been stopping the market from pumping, because what happens when you got all these people going long is that there's tons of liquidity lower down. If you can come down, hit those stop losses, hit those liquidations, you do tend to trigger cascading waterfalls like this one. And obviously we know that this wasn't even the bulk of the damage. I mean, XRP, for example, damn near hit zero, more or less, against Bitcoin, which is absolutely crazy. Pulled a 3 times gain to get back up to essentially equilibrium, where we were expecting it to get to before. Those of you that were subscribed to this channel are going to know about that. We've been live every single day, so shout out to those of you that have that bell icon checked. Now, what's so important about this is that we saw an incredible event of the market crashing super, super, super hard, but we bring it back to Bitcoin and what we can see with Bitcoin, and again, relative calmness. Most of that damage seems to be gone, and it seems like it was only started because of the Trump tariff drama. Now, again, we come back to why liquidations are so important in this narrative, in this conversation, and it's because if you have got an over-leveraged market, the market is essentially, this is the most important thing we're saying in this video, the market is essentially looking for reasons to drive the price lower and hit those liquidation levels. And I want to explain to you the mechanics of how this works, right? A lot of people don't actually get this, but let's say that you got a position size of 0. You're not in a position right now. If you go ahead and open a trade worth $100, you would have had to buy $100 worth of the asset. Now, if you have a stop loss down at, let's say, this level here, or let's say the level's like right here, as soon as the price starts hitting this level, you have an active position open worth $100. The only way to close that position and, you know, use your stop loss or use your liquidation level is to sell your coins into the market. And this is very problematic if the market is crashing really, really extremely, very, very aggressively, because if you're now forced to sell into that downward pressure, you're going to make that downward pressure get a lot worse. And that's how we get insane shit like this. This is how we get insane shit like even Ethereum, which didn't drop anywhere near as hard, tagged a beautiful support level that we've been watching and identifying on this channel for months. So once again, huge shout out to those of you that have been sticking with us. All this patience, all of this forward-looking analysis, staying sober with our takes has paid off. Huge shout out to those of you that have been sticking with us throughout this market cycle. We're going to continue cleaning up here for sure. But what's absolutely beautiful about this is that now that we've done that, now that we've had that excuse to have that liquidation hunt, we are out of the woods, because as soon as all of these positions get liquidated, that's all that liquidity now essentially being soaked up, and we're ready to potentially start going higher. And I know that this sounds insane, right? I mean, so many people lost even their livelihoods and things like that. And honestly, all I can say to that is, look, there are principles that you ought to be following as a trader in these markets. This is pretty universal. This is pretty consistent. And I think it's extremely important that people get this right. We were tweeting a little bit about this over the crash here. Pay attention to the coins that held strong. If they do well in storms and sunshine, you might be onto something. But more importantly, don't be over leveraged. Don't go all in on a single trade. If you follow the basic rules, you'll never get uncomfortably hit, even during a black swan. If you've got basic risk management, you're not putting too much money into trades, you'll be fine. Similarly, the crypto crash taught us one key lesson. Again, if you don't learn your lessons the easy way, you will learn them the hard way. Check out the Twitter for more shit posting if you're interested in that. But this is really important, understanding the mechanics of how this happens, because this explains why we get these extremely intense washouts in the market. But if we take a look at how the market has actually handled these kind of instances in the past, we start to get a very interesting picture being painted in front of us here. So let's break this down. Let's go ahead and start with the first line that I've got drawn for you guys right here. This was, of course, the March coronavirus crash of 2020. And obviously the whole world was kind of going into some level of existential dread, or whatever you want to call it. And at the same time, the market started collapsing. It triggered a major liquidation event. Bitcoin dropped from $8,000 very, very low into the $3,000 range. And it literally was the trigger. It was the absolute bottom for essentially this mini bear market that Bitcoin was in. And it triggered one of the biggest run-ups in Bitcoin's history. And this is really important, because it's not a coincidence and it's not a surprise. What the market was doing prior to this is really, really important. Let's take a look at this here and really digest what we see, okay? Let's go ahead and hide this line real quick and show you this chart with a little bit more clarity. Now, what's so important is if we kind of digest where the market was before this liquidation event happened here on the 12th of March, the market was already kind of where it reached equilibrium literally 45 days later, right? So the dump happened. It took about 30 days, 1.5 months to recover. And when we did recover, the market found itself in the same equilibrium that it was already in. Again, what these leverage washouts do, the function of them, is to allow the market to carry on its original trajectory, but this time unimpeded by all of that essentially liquidity down below that market makers and so on would have wanted to capture. So it's a really important reality to understand the market, because when you know that you've had a ton of people that were already going long and they're now out of their position, you're getting a market reset. Things are entering slightly more neutral territory. And that's really important to keep in mind, because if you've got residual bullish bias, if the market was already bullish just in the long-term trend, for example, then you've now essentially reset the playing field and allowed it to happen much more organically. That's number one. Number two, the second really big thing that happens, and again, we're not even touching on the destructive outcomes of these leverage washouts, because it's a given. We really value safety on this YouTube channel. We preach it all the time. It's the most important thing you could do, and that's why we cover it all the time. But we need to understand what the mechanics of this lead to, because the second key thing that happens as a result of these washouts is that those people who were previously long are now no longer in a position. So when you've got nothing impeding you from continuing on higher now, because you don't have those liquidity, essentially brick walls that you hit because you need to come lower before you can go back up, once you've kind of taken care of that, those same people are no longer in long positions. And if they want a piece of the market going up again, they have to click buy again. So you're actually engineering a lot more buying pressure as well as a result of these things. Now look, there is the flip side to this, that the Bitcoin market, the crypto market, could be entering a much bigger bear market. And this is not going to be a super short video. We're going to be covering that in this video as well. So make sure you do stick around for that and smash up the likes if you're finding this one useful so far. This is a really honest, big, deep dive into this subject because it's absolutely essential. But the first one here, similar kind of event. I mean, obviously it resulted in a much bigger drop, but the first one here definitely showing us that actually these kind of liquidation events do allow the market to move up in much more impressive ways. Now we move over to the next one here, and this was after Bitcoin topped out at $64,000. It had the subsequent pretty much 50% crash down into this 30K range, and it stayed here for about 65 days, or really about 80 days, 3 months for Bitcoin to actually recover back above this range, which is so interesting because it was partially driven by this initial sell-off, but it got a lot worse on this major liquidation event. Again, this entire candle from wick to wick spanning 45%. This is an absolutely massive wick, and we're seeing the same thing happen here. It's just slower. We're getting the same kind of washout. We're trading lower afterwards. There is a recoil to this, by the way. I'm not saying that we're going straight up to the moon tomorrow. That's not necessarily how this works every time, and you're going to see that throughout this video. But what you will see is that for the most part, with exceptions, and we're going to cover those exceptions momentarily, you are actually getting a very nice paved road back up. It just might take a little bit of time. And linking this back to the tariff situation with Trump right now, we've seen how this played out earlier this year. It doesn't have to play out the same way, but what we saw earlier this year was a massive crash in the S&P 500. And of course, it did end up hitting crypto too, where essentially we got this massive liquidity grab here. Just a massive, massive drop, essentially. I can't even call it a liquidity grab. And this was a result of that engineered fear due to the tariff drama. Now, it only retraced the market down to a very, very healthy place, backtesting a previous all-time high, which is so important for us to keep in mind. And from there, the S&P 500 was able to rally up beautifully. And this was even though there was so much more tariff drama back then in March of 2025 than there is now in October of 2025. Bear in mind, in March, tariffs were being hit on everybody. In October, so far, it's just China, and yes, it is severe, but we've seen how this played out previously, and it just wasn't that big of a deal. Now, from this all-time high, up until the point that the S&P recovered that all-time high, it was a 4-month journey, but it only took about 45 days for the dump to be over, and for most of that time, we were actually trending back up again. And again, that's going to be a clear example of how these tariff drama bits of news are very transient in the market. They're great for headlines. They're great to scare people, especially people that take the headlines very seriously. But for the most part, they're not having a long-lasting effect on the market. Now, could this one be different? Obviously, it could be. Could it be coupled with, I don't know, a war or something else terrible? Yeah, it could. And gold definitely seems to agree with some of these more doomsday hypotheses. So that's going to be something to keep in mind as well if you are a bear. You do have some signs. They're light, and we're going to keep covering them in this video, but you do have some signs to go off. But what's undeniable is that the tariff drama from last time, 45 days, if that's what we're looking at here, yeah, it's going to be a little bit of shit for a little bit of time, but I don't think it's going to be lasting too long. Maybe 2 months, something like that does make a lot of sense. Let's bring it back to the Bitcoin chart and continue on, though. I want to keep looking at similar events here so we can really kind of understand what happened. And the next one that we've got here is even better. It did trigger a pretty sizable drop here, again, from high to low. This is going to be about a 25% drop, but it didn't last particularly long at all. And then we continued rallying on up, and we hit new all-time highs. So absolutely fantastic. We're seeing the same thing proven 3 out of 3 times so far. This is one of the times where it goes wrong. Here, we entered a downtrend, and the liquidation dump made it worse, and it continued us lower. It happened here, and it happened here again. And in both of these cases, it did trigger a little bit of a reaction rally, but this reaction rally was shit and useless and wouldn't have helped you recover your losses. And neither would this one, right? This one was also pretty small, not very, very significant. So we have 2 very problematic examples of this actually making the market get much worse. We'll cover these again in a second. We're going to come back to these. And then the next one here, again, more of what we're expecting. It literally ends the bear market. It's that final push down, and then the market is able to recoil for a little bit, and of course, pretty much like clockwork. It takes about 2 months, and the market is back on its way to, I mean, of course, we know how this rally went. It was historic. It set our all-time highs above $100,000. The next liquidation event, same shit, ladies and gents. Nothing different. 60 days after that liquidation event, we were already trending back up. We had a period where we recoiled from the drama, and it's highly likely that we're going to get something like that again. But in most of these cases, we did end up rallying on upwards again. We had it again when we hit this range in the 60-70k area. This is where a lot of people lost their minds in recent market moves, and obviously if you're watching this channel, that wouldn't have happened to you, so you really need to make sure that you've got good sources for information in these markets as you navigate them, because time is of the essence. This bull market is not going to last forever. Some people already think it's over, and in any case, that does mean now is the time to be seizing these opportunities and making as much cash as you can off them. Now, on those notes, there are phenomenal bonuses available to you if you check out the links in the description down below. Bybit is offering up to 30k in free trading capital that you can throw back into the market, which is absolutely sick. You can just put it anywhere, and any profits you make with that money is going to be yours to keep. Same with Blowfin, with even more aggressive bonuses, so check them out if you're not from a restricted region. But moving it back to the market here, that's kind of our final liquidation event here, and it definitely continued to prove the same pattern, that actually this does pave the way for the market to go higher. Again, there was recoil here, and this recoil lasted 8 months to get back above that high. So it was a very long period of consolidation, and unfortunately we have to be open to those ideas too, because Bitcoin has very much slowed down in this market cycle. I mean, this consolidation zone here lasted also 7 to 8 months. This one here also 7 to 8 months. Even this one here lasted, to really get above that high, another 7 to 8 months. So very, very standard kind of time frame now that we're working with in this crypto market, and that is something we do need to keep in mind, which, again, a lot of people aren't going to like it, but these are the same people that are going over leveraged into trades with too much money in their account and essentially risking it all. You know, there is always going to be baseline risk in this game, and if you try and act like you can get into crypto and make all the big bucks without taking that risk on, you are going to get wiped out on events like what happened yesterday. And I think that's so important for us to keep in mind, because it's going to keep our heads level and it's going to keep our risk managed tightly. This is really, really important. You're in one of the most volatile asset classes in history. You have one of the best opportunities to make generational wealth just sitting at your fucking laptop all day. But we can't imagine, we can't pretend that this is going to come without its risks, without its major destructive pitfalls. And all of them, most of them, can be avoided by very basic risk management practices. I'm saying this again for the second or third time in this video so far because it is so important. But let's come back to the chart here, and let's talk about the two instances where this didn't actually work out for the market. This dump right here and this dump right here. And there are similarities. I mean, the market topped out. It was only a marginally higher all-time high. So check, check, check. It's exactly what we've got right now. We're not setting substantially higher all-time highs. We haven't done so for a very, very long time. And the liquidation event really plunged us much lower, a lot less intense than the dump that we saw today, yesterday, mind you, but similar in terms of when it happened in the market, and it did result in a major drop down. Now, here's my problem with these ideas. The first key problem I have is that, first of all, if we zoom out, the data is not on your side. If you're trying to make a case that liquidation events are bad for the market and that these kind of massive washouts are going to result in the beginning of a bear market, the data is just not on your side. There aren't enough things confirming these ideas, and as a result of that, you're already standing on your back foot if that's your argument. But let's take this a step further. We understand at this point, because you've been watching this channel for a while, or you've just got the common sense even though you haven't been watching the channel, we understand that these crypto markets now are heavily, heavily dependent on the health of traditional finance. And traditional finance really typically just means the index S&P 500 or a couple others. And I think this is so important for us to keep in mind here, ladies and gents, because if we are going to be reliant on these kind of indices to perform well, then again, we've got a really clear sign that this is potentially a sustained long-term bull market because of that backtest of that previous all-time high from 2021, 2022 being kicked off right here in April. And the reason that's so important is because you don't typically, and like I said, 8.5 years doing this, I could be wrong about this, but this is just going off experience of things that I've observed, and I'm a very keen observer of these things, obviously, because this is what I do full time. we do have, I think, a very, very clear situation in this market where backtesting that previous all-time high is essentially, these are typically going to be early stage bull market activities. This is just not something that you typically see late stage bull market or even mid stage bull market. And you can search that up with your favorite LLM, ChatGPT or whatever, if you want to confirm these things, or you can just look back at it historically. This is something that we've known for a long time. If you manage to backtest the previous all-time high, that is a strong indicator that you're still early stages in a bull market. I think on top of that, we put all the factors that we already know about, the rate cuts, the fact that we've got AI pushing innovation incredibly. It's not slowing down. It's a very silly take. It's only speeding up. And I think where a lot of people are going wrong with these whole AI bubble takes is essentially just that they don't really understand how innovation works. And to them, if you're not constantly shipping products every week and saying plus 10% on your stock every week, then we must be slowing down and reaching some sort of saturation point. It's silly. It's clearly the kind of thing that you say if you've never built anything. It's not how real life works. And I think this is really, really important because right now the tech sector is a major driving force for the S&P 500. And sure, we're going to get pullbacks along the way. It's standard. It's literally never been different at any point in history ever. So we have to expect pullbacks along the way. And some of these pullbacks might be a little bit sharper than others. It's also standard. What we need to keep in mind is that the S&P 500 did rise by 40% in 6 months. So seeing so far a 3.2% pullback, or even down to this support zone I'm looking at about 6,500, a 4.3% pullback, or even something much larger like a 10% pullback down to the previous all-time high. All of these ideas are very sensible that we can see S&P 500 kind of fulfilling these. But what's really important to keep in mind is that the entire crypto crash was caused by just this little dip on the S&P 500. And we saw other stocks trading in there after hours. I don't know if that's still going on, but their post-market trading sessions, we did see them moving a little bit lower. And again, that really just underscores for us that the drop we saw in the S&P 500 just wasn't that big. It wasn't that alarming. It wasn't that crazy. The reaction to, considering how scared people actually are of tariffs, the reaction to those tariffs in the market, I don't think it was particularly heavy at all. Literally, the only thing that happened, and I said this at the beginning of the video, we're saying it again to make it extra clear, is that the markets in crypto had way too much leverage and it needed a washout. Now, it's really important for us to keep this in mind because a lot of people just don't really spot patterns particularly well. But here we go. Right here, we did put out a tweet about this. The markets needed an excuse for a leverage wipeout. And since tariffs worked last time, it worked again this time. Really, really important stuff. It's just narratives. You could call it market manipulation. I don't even think it's that crazy. It's literally just the fact that the narrative worked last time. We needed a leverage washout this time, so it worked again. The fact that the leverage washout was extreme doesn't really say anything about crypto or the state of affairs in crypto because we already understand that a lot of these markets are very illiquid. We're not being proven anything that we didn't know. We're not seeing evidence of anything that we didn't already know. We're literally just seeing a logical play out of events. Even though it's really destructive, even though it's really, really crazy, when you have an understanding of how illiquid these crypto markets actually are and how they're absolutely incapable of weathering these scam wicks, which we get regularly. This wasn't even the worst, and we've covered this extensively. This wasn't anywhere near the worst price action that we got after a liquidation event. In fact, pretty much every liquidation event I've just shown you throughout this video was much worse than this on the day that it hit. And that leads me on to my next point here. Because, ladies and gents, if we are seeing $19 billion in liquidations, many times more than COVID and FTX put together, for example, and despite that, most of our coins are still chilling right where they were. Let's put this in perspective. Bitcoin today is exactly where it was 12 days ago. Ethereum today is exactly where it was 15, 16 days ago. This is not surprising. The leverage washout happened. It took the liquidity it needed to, but the markets didn't want to trend lower. The markets did not want to go lower. Now, look, like I said, there is a recoil event here. There is a recoil time frame here where we have to expect things get shit or stay shit for a sustained period of time. It's natural after a move like this. It doesn't have to happen. We saw how COVID handled it. It doesn't have to happen. but we've seen how these things play out. And I think it's likely that there is going to be some time where we're recoiling from this because this tariff drama can get worse. China can retaliate and put counter tariffs on, and, Trump can kind of go gung-ho again on them, and whatever. It's standard shit. We've seen it going on for a long time. But the strength here is undeniable. Certain coins have recovered a lot of their losses already. XRP, for example, literally from where the dump started, is only down by 13%. This is a normal day in crypto. Binance coin, one of the stronger coins in this rally, is literally only down from its all-time high up here by 13%. And Binance coin is an altcoin. It's not even anywhere near as large as Bitcoin. We're seeing this across the board. Even coins like Solana holding steady in a strong support zone. It barely even penetrated the support zone. All we got was essentially a decent market reset where these coins fell down to more palatable levels. And the sentiment? Well, if we take a look at the Fear and Greed Index right here, sentiment dropped down to 27 from a reading of 64 the day before. This is incredible. We've seen a market reset with coins dropping down to better price levels. Ethereum against Bitcoin, as we covered earlier, dropping into an incredible macro support zone that always made sense to be buying. Bitcoin itself dropping down, resetting massively, re-entering the middle of this 100k range. Incredible. Binance coin already pushing back up toward those all-time highs. Incredible. XRP, one of the coins that were major, that got hit the hardest, already recovering to just 13% below where the dump started. This is an incredible first step. Even if the markets get worse, we are seeing tons of underlying strength here. And again, when we come back to the argument of bear market versus parabola or parabolic trend, you are seeing here a lot of evidence of underlying strength that's going to weaken those bearish arguments. You can still make them, and we're going to dive into them right here in a second. If you're excited for that, do me a favor and smash up those likes if you haven't done so already. And while you are down there, we are offering an incredible one-to-one program here with some pretty phenomenal results that we've gathered so far. So if you want to get yourself inside, get some details, and definitely reach out using this link right here. But one of the key things that we need to understand about these people calling for a bear market is that they're really grabbing at fundamental kind of global shifts that haven't happened yet. And that's kind of always how it goes, because when you've got a long-term bull market, you're not really going to have it change based on technicals alone. Bear in mind, like, technicals are always lagging indicators, right? They just show you things that happened in the past, not things that might happen in the future. And that's really important because you're never really going to be able to call tops using TA like that. And you are going to have to rely on those kind of global shifts. And I think from those perspectives, it's really just a case of asking, what are we incentivized to get? If we understand that Trump has the power to dump the markets to shit based on just not liking the president of China, which, whatever, fair enough. You don't like it, whatever. Not really the point. If we understand that, then we also understand that Trump is the same president that literally gave everybody a buy signal at the pico bottom of this drop in the S&P 500. I don't see a man here who's incentivized to let these markets crash. I've heard tons of theories about how it makes sense because then you can refinance debt and so on at lower levels, and all of that stuff sounds fantastic and, very reasonable. But at the same time, it's not happening. And taking these approaches means that essentially you're the guy selling your crypto at the bottom of wicks like this because you're buying those fear narratives, even though we're getting these recoveries. Ladies and gents, if these recoveries get a little bit stronger from here, and if traditional finance absorbs this news about tariffs quickly, or let's say the tariffs reverse course, which is what happened 6 months ago earlier this year, then all we got was a super painful but healthy washout in the market. Think of it as a heavy storm, lots of damage caused to homes and roofs and whatever, but you've now got greenery after the storm has passed. You've now got essentially a new beginning. And if we're able to leverage that, then this is going to turn out to look very obvious as the start of the potential parabolic trend for Bitcoin. And let's color in what that parabolic trend could look like. One of the things that we've covered extensively on this YouTube channel now is just the fact that, Bitcoin on these super long-term time frames here has moved in pretty consistent ways, right? We've got this, little kind of oval that I drew showing you Bitcoin's aggression here. And if we kind of map this on some of the things we've seen before, it's very typical that Bitcoin starts off a little bit slower and then gets quite explosive and ridiculous for the basically, the second half of the bull market, or the last quarter of the bull market, or whatever it may be. It's pretty consistent that we get these kind of things showing up, and if we're about to do something like that again, then we literally have paved the way for that to be possible now. And I'm not saying that we're hitting levels like 1 million or 1.2 or whatever. I think that's obviously quite far off, and it's really going to depend on a massive debasement of the US currency. So we don't want to see that. That's not going to be good for the world. But what is going to be good for us as investors is if we can go parabolic in some way. And this is, as we've seen from that previous chart with all of our lines, this is one of the more typical ways that something like that ends up playing out. I want to see if I can get my lines. I don't think they're going to show up because we're on the monthly time frame here, but that's totally fine. And so that's really, really important for us to be able to keep in mind, because if we are expecting this bull market to continue, if we are expecting the S&P 500 to soak up this news, which it seems like it's doing, by the way. I mean, the tariff news hit everything at the same time. It's only crypto that had the reaction because it needed that leverage washout, but traditional finance doesn't really seem particularly harmed by it. I mean, we were watching the post-trading live yesterday, and they were just kind of chilling. They were just hanging out. They dropped a little bit, but they recovered a lot of those drops, and none of them were anywhere near as dramatic as what we saw in crypto. I think it just tells us that crypto's still wild, and I don't think that's a surprise to us. I think that's something that we've known for a really, really long time, and that's important for us to keep in mind because it pays us in both ways. Sometimes you're going to get hit really, really badly, absolutely kicked in the balls, and it's going to suck, and you're going to hate your life for it. But the flip side of that, the reason we have those kind of moves is because we also get that incredible upside as well. And like I said, 8 years in the game, this is how I've seen these things tend to play out. Now look, I've gotten market tops wrong before. I got the last market top wrong. I didn't think we were topping out at 69K in 2021. So it's entirely possible I'm going to get this market top wrong as well. And that's important to keep in mind because none of us are going to have the ability to forecast tops in the market particularly well. It's just genuinely a really difficult thing to do. But the bright side of this is that we don't need to. All we need to do is watch what traditional finance does and understand that Bitcoin only moves with the blessing of traditional finance. And if that's what we have our eyes on, then frankly, we want to see a little bit more of a pullback on the S&P 500 because when you get pullbacks, that's how you're able to produce massive rallies afterwards. It's really important. It cleanses the market and it paves the way for us to go higher. I think it's all going to rely on what we end up seeing on that Monday trading session to see how these markets are going to digest, absorb this news, and what might end up happening afterwards. But I'll tell you what's interesting. So far, we're a decent ways through Saturday now. If we look at this on the daily time frame here for Bitcoin, there are only 5 hours left in this daily candle at the time of recording. And to me, what that's telling me is that we've already had a pretty stable weekend. Nothing's really happened. Money's just moved left and right. Altcoins have recovered. Some have dropped a little bit harder. But for the most part, it's just recoiling. It's just people saying, what the fuck's going on? And kind of getting their bearings again. And so what's really important is a lot of people, they've got this understanding, and me up until recently, that weekends are where crazy stuff happens with crypto. I've been saying this up until recently. I only changed my mind on this a few days ago before this dump actually happened, coincidentally, because what I'm saying now is that actually, yeah, like it used to be the case that weekends come along, CME is closed, traditional finance is not trading, and as a result, we might expect some extreme volatility on crypto, some unhinged batshit crazy stuff to happen. It happens. It used to happen a lot. But these days, what we're seeing is that Bitcoin just kind of tries to fall in rhythm with what traditional finance is going to do from Monday moving forward. And I think that's really important to keep in mind. Because again, with that massive intertwining dependency that Bitcoin has with traditional finance, essentially what we're seeing here, ladies and gents, is that if we're getting this kind of stability with Bitcoin now, while traditional finance is potentially absorbing that news, they might just kind of meet each other instead of Bitcoin doing something crazy. I mean, like I said, we're nearly halfway through the weekend now, and nothing's really happened. That to me is a sign that Bitcoin is kind of starting to find some stabilization with traditional finance. And again, we're only going to get the answer to this on Monday, but we got tons of weekends of price action behind us now to have been able to see this, that really Bitcoin just tries to find out where traditional finance is going to be on that Monday open, and it just tries to match that over the weekend, which makes complete sense because we know that it's the same money these days that moves Bitcoin, which is the same money these days that moves traditional finance. Really, really important stuff. And I think the key thing that we're developing here are just great opportunities to get some of these coins. I mean, shout out to anyone that did manage to make money on some of these bigger drops against Bitcoin pairs, for example. That was absolutely incredible. Obviously, Cardano was the one that really surprised me because despite the fact that it's also large, not as large as XRP, I just didn't really think that we could get such an incredible scam wick like this. I mean, this was essentially all-time low territory for Cardano here on this chart against Binance. It literally never traded this low against Bitcoin in its history on Binance here, and I don't think that that's surprising. I think that that's, you know, a huge testament to how crazy this liquidity grab has been. I think it's very surprising that it even happened, but now that we know it did happen, it's conceivable that they can drop down to all-time lows, but it just shows you how much underlying strength there was in this market, that all of these dips got bought back up, and a lot of these coins are now, like, I mean, if the big crash didn't happen and we just got this dump, it would just be a bit of a shit day. Do you know what I'm saying? It wouldn't be anything much more than that. And I think that's important to keep in mind, because if these coins haven't died, then really all we need to do is watch how things go over the next days and weeks and see if they slide into a downtrend. And if they do slide into a downtrend, I think the key thing we're going to be looking for, especially for these charts, is essentially just where's the macro resistance? And if we're approaching macro resistance levels, that's going to be a really important sign that actually, hey, you might want to pay attention. I'm sorry, macro support levels. If we're approaching macro support levels, that might be a really good sign that, hey, you know, you want to watch out for those support levels, because if the market is weathering such a terrible event so well, and then it continues sliding down, that's just going to be retail exiting their bags and continuing to redistribute their wealth back into the hands of people that are a little bit more patient, a little bit smarter, deeper pockets, so on and so forth. All of those things tend to go in hand with each other. And that's going to be retail slowly selling their bags off to those people, potentially getting ready for that next massive wave up where retail will inevitably buy back their bags, but of course at 10%, 20%, 50% higher price levels. This is how we've seen things going on for a very, very long time. So look, I don't hold these answers. I don't know exactly what we are going to get here. I can't see the future, but what I do know is that this is something we've seen the crypto market do quite a bit throughout its history. We've seen it work out incredibly well after the coronavirus market crash. We've seen it work incredibly well after the 64K all-time high. We've seen it work incredibly well after the 48K, 50K top. We didn't see it work well on these two instances only in recent Bitcoin history. And there was one over here, my bad, that didn't show up on the screen. This one was phenomenal for the market, and then again once more. The data is just not on your side if you're a bear right now. It's still a very speculative theory, and I would be very uncomfortable if I was betting on markets getting significantly lower from here, seeing how well they recovered. It's not going to give me more confidence about my ideas, because you've essentially had the best opportunity to scare everybody out of the market and make everybody dump their bags. You've had the best opportunity to absolutely fuck this market. And if the end result is that these coins just had what looks like more of a standard dump at the end of it, if you just ignore the wicks, you're not getting the confirmation that you would want, if that's the kind of position that you're looking for. So who knows, this could change. And like I said, we'll be live every day covering this stuff right here on this YouTube channel. So if you're subscribed to the channel, you're going to be able to catch that. If you've got that bell icon checked, you're going to be able to catch that. And if you're inside of our free 4Flies Gold Telegram channel with this link in the description, you're also going to get more exclusive analysis in video form just like this sent for free into that Telegram channel. So that's content that YouTube doesn't see, and you will be able to get access to it if you get into this Telegram channel linked down below. So check all that stuff out. Really hope you've enjoyed this video. Slightly different one, bit of a deeper dive, but I think very important at this kind of stage in the market. If you have enjoyed this video, you know exactly what to do, and we'll see you all on the next video or live stream. Cheers.